you can then go up to your medium time frames and you can look for liquidity targets, which first target might have been down here. You get 2.8 out of the trade, and then if you're feeling brave and you've got these 3 time frames, you could then look for those swing points. That's a 7R trade, and then possibly, if you're feeling really brave, welcome back team to part 2 in the 3-2 technique. This is the second part of the 3-2 technique series. This is going to talk through how to enter trades and what we're looking for. If you haven't done so already, make sure you subscribe to the channel, like and comment below. And remember, we have a Discord mentorship, which I'm opening up now. There'll be 50 spaces left. We've got about 50 members in there so far. I'm going to expand it to a total of 100. There's going to be 50 spaces left, and once they're gone, they are gone forever. There'll be no more free entries. It's a completely free mentorship, so make sure you head over to the Instagram at StrongMoneyForex. Here we have a nice example on gold, okay? We're on the 2-hour chart, and we've got a really nice zone here that we like to use, okay? Beautiful example of this, okay? We've got a nice push down, really lovely imbalance left behind. I won't draw out the whole thing, but you can see what we're looking at here, imbalance there. We had a nice push up, which raided out some liquidity to the left. Just before that, we'd had another raid there as well. So, you know, it doesn't always have to be this one push up, which is the raid. The raid can happen before, and price sometimes will kind of meander a little bit because that's kind of buyers putting pressure in, and then it will shoot down. It doesn't always have to just straight go up, straight go down. The key is that on a higher time frame, that is, as you can see there, that is the entire zone. Okay, so on a higher time frame, that whole part was the raid. So, you know, just bear that in mind when you're drawing your zones out, that sometimes your refined zones won't include all of the data. That is all part of the daily zone. If I just highlight that, that is the daily zone there. Okay, that is the daily raid and the daily push down. So, you know, sometimes when you refine your trades, it's worth just bearing that in mind. But for this trade, for our sake anyway, we're going to use that as our zone. Okay. Now, prices come nicely into that zone. Let me just use the replay tool, and I'll just track this back a little bit, okay? Prices come really nicely into that zone, as you can see there, okay? And we have, as you can see, clearly had a reaction, okay? And I'm going to talk you through the theory of this. Now, we know from the higher time frame that we are in a lovely downtrend, okay? Prices come back and retested, and then we've shot down. I'm going to move this a little bit to the left just so it makes it clearer when I do my drawings. I'm going to change that to blue, which then matches up with the drawing we did earlier. Okay, so this is the move that broke structure, which means this is our premium and discount. Okay, that's our very clear structural break, major break of structure on the higher time frame. We've got our imbalance on top there, look like that. Okay, we've got a zone on top there like that. Okay, so that's our premium discount zone. Very, very clearly, very, very obvious. We know what we're looking for. That is exactly our premium and discount zone. Let's just tighten that all up, okay? So we have a supply zone in premium pricing. This is a high probability area for a short, okay, because the major trend on the 2-hour is down. So now we drop down to one of our lower time frames. Let's use the 30-minute, okay? Now, very, very simply, now we have price come into this zone. This is exactly what I was telling you about earlier. Okay, if I drop down now to say the 3-minute chart and I look at that first trade, okay, that first kind of change of structure, this is exactly the example I was talking about. Let's say you've taken that trade, okay, price comes into zone, you get a nice push down, to be fair, nice break of structure. You wait for the 50% to be retested. Let's just draw that on as well, 2 seconds. 50% to be retested like that. Okay, and then you take the trade. What happens is you just about get your first profits, which is 2R. That's how we trade in CFFX anyway. Just about get your first profits, but then price comes back up and tags you out. Now, your appetite might be okay for that. That may be the way you want to trade. For me personally, I like to make sure I'm getting into a high probability trade. That's kind of a fun trade. That's something that could work out. It might hold, it might not hold. You know, you haven't got yet any medium time frame confirmation, and this is why with the higher time frame zones, the 3 technique works so well. Okay, let's get rid of that for now. You would have got some profit out of there, to be fair, so it's not a bad shout. And, you know, in and out of the marketplace, at the end of the day, you could have added into it. So if that forms part of your plan, if that's the way you want to trade, then knock yourselves out. For me, with these higher time frame zones, I'm waiting for a bigger break of structure first, and I'll show you what I mean, okay? So the first thing I want to see, okay, is price clearly showing us it wants to move down. So let's draw out this trend, okay? Had this push up, we've then had this push down, we've then had a failure to make a new high, then we've had that break of structure, okay? And then we've had this push up into it like that. Now, what color did we use earlier? I think that was green. Let's put that as green, okay? So that's now our medium time frame trend, okay? Let's just draw out our break of structure. And that's our second time frame. So we've got our hard time frame zone. We've now got our second change of structure, our second break, okay? We draw out our zone from the high to the low. And when price reaches premium again, now we're ready to take a trade on the lower time frames, okay? And it's just a case of repeating the cycle again. If I now drop down to the 3-minute time frame, this is exactly how I would have traded it. So price has clearly broken down, okay? I'll show you where that trend is, okay? So that's our medium time frame trend, okay? Price has then come back in to this new supply that we've created. So in this premium zone, we have this big move up, big push down. Just try and get it a bit tidier, okay? Big move up, big push down. And what's happened here is we've got this supply. See this last move up, then a lovely push down, leaving this imbalance behind, okay? That now is our new trading zone. And you can see there we've got imbalances there as well, okay? So we've got calls, we've got reason for price to push higher. Now we've got this second time frame lined up. We know we've had a break of structure on the 15-minute or the 30-minute. Now we are looking for a lower time frame entry, and this third time frame is what signals us to get into the big trades, okay? Lovely. Look at this. You can get a really good idea in these zones when price is going to change structure. When you're thinking about taking risk entries, it's these sort of areas that the risk entries can be really, really helpful with, okay? If we have that push up, push down, push up, push down, you see this kind of failure to make a new high, then a really weak push up, and then another failure to make a new high, and then boom, okay? We've then got that break of structure down. This for us now is saying to us, this trade is ready to go short. Let's mark on our break of structure like that. Break of structure down there, okay? The last up move was that move there, so let's mark that up, which is like that. Okay, that's our last up move before the push down. You can see prices kind of wicked above this. So to be fair, you might have been unlucky on this one. The thing that would make me a little bit nervous about this is that price hasn't yet tested the 50%. So as a result of that, you might want to just go a little bit wider with your stop, okay? If you're, ideally, if price was like that, you'd be happy all day long. Because it's not, and it's there, you've still got 50%, which we know 50% of the range is really high probability to be tested, because this is where the bulk of the orders sit. The average of the two extremes is normally where the bulk of the orders sit, so it's something to be cautious of. So with this sort of trade, you might want to play place a slightly tighter stop, but you may not have got that kind of thought process in yet. For me, if I'm within a zone at the lower end, I quite like to leave a wider stop, sometimes to the top of the zone, just because it's a bit safer. But let's say you called it perfectly for argument's sake, okay? You can then go up to your medium time frames and you can look for liquidity targets, which first target might have been down here. You get 2.8 out of the trade, and then if you're feeling brave and you've got these 3 time frames, you could then look for those swing points. That's a 7R trade, and then possibly if you're feeling really brave and want to hold it all the way down for the swing, which you can get into with the 3 technique, you can get into swing trades. For me, I'll probably be out there and be looking for another entry up here, okay, and getting into a second entry, then kind of adding into it. But let's say you did hold, you've got your next liquidity point there, which is a 21R, and then your final liquidity point there, which is a 36R trade. And I think if we just kind of play this out, the problem with this style of trading is it just takes a long time to get down there. Okay, so you've got your 22R out, and then I think you just about you might have been tagged out of that. Okay, so you know, when you're aiming for liquidity points, a good tip I can give you is it's often worth aiming just above the supply or the demand. So for example, if I was holding down to this trade here, okay, this is a demand zone here, I would take my position out somewhere like that to be on the safe side, because price can reverse. Same thing applies. If I was holding down to this zone here, okay, I would take my position out here. Okay, so look, for me, I would have been out around there. I would have gotten my 5R, but I've probably got multiple positions on the way down. If you wanted to swing it, you could hold down all the way for the 33. The only problem with that is if you measure out how long that's taken, it's taken 14 days. And for me, that's a slightly different style of trading, okay? But look, you can see how powerful the 3 technique is, and you can see how usable it is, and how it can get you into these really high probability trades. If you're looking at these higher time frame zones, don't just jump into the first 3 minute, 1 minute, 5 minute change of structure, or break of structure, or chalk, or whatever you call it. Don't just jump into the first one, and be prepared for the fact that it may stop you out to get into the bigger trade. If you can wait for that 15, 30 or 1 hour time frame to line up with the 4 hour, 8 hour, 12 hour daily time frames, then you are able to look for the lower time frame trades, and they will generally play out a lot better. Once again, guys, thank you for tuning in. This next video here is going to improve your results and improve your profits. Make sure you check this one out, because this one will make a huge difference.